Welcome to the Strategic Treasurer Podcast, your source for interesting Treasury news in your car, at the gym, or wherever you decide to tune in.
How much attention do payment transactions get in your day-to-day life? As a consumer, perhaps very little. As a treasurer, quite a lot. But will that always be the case? Can you envision a world in which payments are dead? On this episode of the podcast, Strategic Treasurer's managing partner Craig Jeffery and TD Bank's head of corporate products and services Rick Burke discuss the convergence of changes taking place in developing technology and its applications for Treasury. From enriched payment formats to faster and better payments, major shifts are occurring that will impact the future payment experiences of not only individual consumers, but also institutional transactions. Listen in as they share valuable insights into the future of payments and how treasurers can be prepared for substantial and disruptive changes.
Welcome to the Treasury Update Podcast. I'm Craig Jeffery. Today's topic is convergence of changes in technology and Treasury. I'm here with Rick Burke, who's the head of TD Bank's Treasury Group. Welcome, Rick.
Thanks, Craig. Really glad to be here.
So what are some of these shifts that are occurring, and how is that making an impact?
You know, if you take a look around at what's happening today, there's some new things going on, but in a large way, I think there's a lot of somewhat older things that are finally coming together to create sort of the potential for meaningful change. We see it definitely in the consumer space. The speed at which payments move, the kinds of information that people want to know, the real-time nature of sort of updates, and so on and so forth. And, for a long time in the commercial space, we've thought of that as a retail-only thing. Commercial's really well sort of centered. It knows how it works. It knows when revenues come in. It knows how to manage working capital related to that. But I think a lot of the stuff that's coming together is going to create a really compelling environment for very substantial change, for really disruptive change to the Treasury. And all of those that serve the Treasury are going to need to sort of help along in that process with ideas, with questions, often with questions, and sort of seek better ways to get stuff done. So I think we're at this sort of convergence of activities that is going to create the potential for significant change and a different look. And we've got to be focused on the windshield rather than the rearview mirror.
Yeah, looking ahead, very interesting. Yeah, you talk about the convergence of these. I know you spend a tremendous amount of time with payments, and we can follow up on payments, but what you're talking about seems to be indicating a change in more than just payments, servicing model, expectations of the clients. What are the biggest areas you see changing? Maybe start with expectations on the client side, and then maybe the servicing model.
Well, I think that's thinking about the client side. I think that's one of our challenges, that there's not a lot of I'm not feeling this overwhelming wave of client expectation, but I am seeing the potential for significant change, and I don't want that to come and sort of wash over our customers and sort of take them out. So, as I think about what's happening here, you think about a technology capability like APIs. APIs have been around for decades, but how they're now being used is different. You take a look at how financial services are beginning to restructure sort of the technical nature of themselves. For example, one thing would be like the use of ISO 20022 or much more data-rich formats. It started a while ago with the internet age and the ability to move from an HTML perspective, lots of data and whatnot. But now with things like 20022 and the rebuilding of sort of core payment capabilities to carry lots of data, I think we finally are at the place where we can really do lots of straight-through processing. And in that environment, I think we can sort of take the emphasis off of payments in terms of what we focus on and get more to experiences. In some other conversations you and I have had, and I've said to a variety of other people, I sort of think of the current time as the place where payments died. I think payments are dead. And I don't mean that in the sense that they're going to go away and people won't need to make payments, but their willingness or the need to focus on how they get done and dealing with exceptions and whatnot, that's going to go away. People that are in this business and that support the Treasury are going to have to figure out how to provide payments without anybody thinking about them. For years, I spent working with customers trying to help them decide whether they were going to drive an ACH transaction or they could bring a card into it. And I think those kinds of conversations and decisions are going to become a thing of the past. There's just going to be sort of payments that occur, and there may be many, many more of them. I sort of have a premise on that as well. But they're just going to, it's not going to be where people make decisions. It's not where they're going to spend time. Where they're going to spend time is on the experience that ends up resulting in the payment. And so whether that's with a client, be that an individual or a business, whether it's with a vendor, whatever the case may be, with an employee, in terms of sort of staffing and that sort of activity, is to build all these things into sort of continuous activities that it's the experience that matters on the front end. What are you trying to do with that experience? Save time, take friction out, make it less expensive. What are you trying to do? And really get the focus there. And then in the end, a payment will result because an employee worked so many hours or goods were sent for the provision of services or whatever, but nobody's going to stop to think about how that payment gets made. It's just going to happen. And so from that standpoint, I think payments are a little bit dead. And we want to talk to customers. The Treasury needs to be asking questions of their providers, financial institutions, non-banks, their vendors. So what do you think is going to happen and how could it be different? Maybe have a premise or two that you can talk about to sort of spark the conversation.
Payments are dead. It's the experience matters. The experience continues. It's not the center of the world, right? I'll think of some examples of on the consumer side, which is what you're talking about. We used to pay with cash or check at the grocery store, then card, and everyone's frustrated if you're sitting behind someone who has a check. Like, who does that now? 7 people, and 2 of them are in front of me in the line. But same thing with the rideshare companies, right? That is so much better than the previous model. You have a better experience because you see where the car is. You get in the car, they're polite because they're rated by you. You don't have to get that little tiny receipt paper stub that you stick in your pocket and lose. And then, you have to fine for an expense report. You get an expense report that shows the direction, where it started, where it picked up. It charges you. You don't have to hand money. You experienced a ride. Everything else followed.
Yeah, you're exactly right. And I suspect I'm not the only person that has spent a large part of a taxi ride thinking about how I was going to have to argue with the driver about the fact that their card machine didn't work and they had to get cash. And did I have cash if we got into that? And how far was I going to push and fight? And that's what I spent my cab ride doing, right? Is just worrying about the payment experience and thinking about how I was going to get it done. And maybe I am neurotic and I'm the only one that ever had that thought. But I suspect probably not. And now, you do a ride share and you arrive and everybody exchanges pleasantries and somebody hops out and they open your door or they get the luggage out of the back and you just walk away. I don't think about that anymore. It's a much better experience. And that's an example where payments still happen, but nobody really thinks about it. It just occurs. And it's not important how the payment happens. Like, many people started those ride shares and, you utilized a card of some type, but there'll be other ways to do that. That'll just build in. But again, once I make the decision once, or set it up for 2 or 3 options, it's a very quick sort of a thing. And I don't really worry about the payment anymore. So that's, I think you have a great example there.
Yeah. The transfer of value. Interesting model. Yeah, it is changing because you want to get somewhere and there's a settlement that has to occur. Why make that part of the friction? I think that's good. Maybe there's some other way than say payments have died. It's the broader experience, but you'll come up with something
Well, and maybe I'll now take you in a little bit different direction. Is that I think I'm afraid that the headline of the podcast is going to be payments are dead, and it needs a little bit more context than that. I mentioned that it's the concept of sort of the worrying about or thinking about or planning for the payment. But on the other hand, I think that we're actually at a time where payment volumes have the potential to explode. And that's going to mean even more importance placed on those providers who are actually processing the payments. So I don't want to suggest that payments aren't really important, but in terms of how you interact with customers, what the Treasury needs to be thinking about, we need to become far more customer focused. Whoever that customer is, employee, so internal experience or external, sometimes it's a vendor, sometimes you're the customer. That's where we need to be placing the emphasis, not on how the payment flows. So I started to segue into sort of more payments, and that I think that's another thing that people need to really start to consider. We were here for the past couple of days at the AFP conference in Chicago, and AFP has their annual Pinnacle Awards, and this year, sort of the winner of that was Uber Technologies. They were recognized for their change, which has a really an incredible social element to it, but they're changing how they pay drivers. It's no longer a weekly pay, right? It's started as a daily pay, and then there was recognition that, geez, there's some people that in that gig economy are doing things multiple times during the day, and they'd like to be paid at the end of every session. And so now I think they can get paid, up to 5 times a day. And you think about that, historically you would think about that as how much work has to get done. If you're running payroll in the treasury, you know how much work you have to get done just in a weekly pay, and how hard that is. I think what Uber looked at was to say, well, what about our employees? What matters to them? And in that environment, in that gig economy, there are people who are using that skill, their vehicles, and their relationship with someone like Uber to generate some discretionary cash, and they have a need for it in real time. And Uber's facilitated that. So how long is it going to be before more of us, most of us, all of us end up being paid every day? And, I can remember, starting out, buying my first house and trying to figure out, is always like you stretch for that first mortgage payment, right? And trying to figure out, well, geez, I get paid like every other week, but I have to pay this mortgage every month. How am I going to sort of budget to make sure I have enough money when I get there, right? And the misalignment of sort of our obligations with our incomes. Geez, if we get paid every day at some point in time because it just makes sense, are we still going to pay mortgages every month? And if we paid our mortgage every day, what would that do to total cost of interest? And would that make sort of people more comfortable? Would that generate a greater confidence and an ability for people to fulfill those? Would it improve sort of payback rates? Nominally, would people be able to stretch into larger properties? What's going to happen? My car loan, same thing. I pay an electric bill every month. And so when you start to think about that, if today you get paid, twice a month, and in the future you get paid every day and you're working 20 days in the month, you just put a 10-fold increase on that type of transaction. Now, the other thing to think about is that if all these transactions happen, I don't want to be sort of initiating them. Something's going to have to occur. But that's exactly what happens, for example, in the rideshare environment, that payments don't matter anymore. They just happen. They get set up once and then they get taken care of. And maybe there's some sort of monthly statement that recaps your activity. But it's that sort of stuff for us to be thinking about and saying, how will that change sort of the treasury with my employees, with my vendors? What's possible? As opposed to, looking again in the rearview mirror to try and see how I might use something that can be more robust from a data perspective, more rapid from a timing perspective, and final, trying to look backwards and say, well, where could I use this specific capability?
Yeah, and that concept of payments are dead. And just hearing you talk about the Uber example and people getting paid more rapidly, the use of things like Zelle, when you want to transfer money, you do it and it's instantly transferred. Breaking what used to be a very difficult process, streamlining it. And you're just basically saying payments are probably going to explode. And I think I agree with you. There's going to be a ton more, and they're going to fit in there. And you spend a lot of time on payments. I was just wondering if you wanted to comment on faster payments and better payments, because you already spoke on the topic of enriched payment formats. And what does that mean? You're sending more information along. People may or may not care about speed. You gave some certainly good examples of speed matters, information matters too, particularly in the corporate side of things. Maybe you can just talk about what you're thinking of and hearing, and you participate in some pretty significant groups.
Yeah, so it's I love your capture of sort of better payments, right? And that's really what we're talking about here. So, faster payments is a broad concept, right? And there's a need for the U.S. to create a faster, more secure, more final sort of capability. And the Federal Reserve sponsored a great deal of work on that over the past few years. And, I was privileged to be a very small part of that, and to see sort of the conversations and the capabilities that are out there. The U.S. is a fiat currency. It's, utilized as sort of settlement currency for things around the globe. And the U.S. needs to have a capability, a leading capability from a payments perspective. And so it's really important that we be focused on this and we get it right. We also live in an environment within an ecosystem that sort of expects competition. We don't mandate stuff. And if you look around the world at the societies that have launched and had very successful, faster payment capabilities, more real-time oriented, they're often mandated. And that's one way to get there. But in the U.S., we like to have competition because we believe that competition ultimately improves the process. It makes it better. And so, there are some emerging capabilities today, but there's a lot of things that can happen to create that. And the focus needs to be on how can it be better, right? And so speed isn't necessarily better in and of itself, but if it provides an outcome. So, in the consumer space, there's an expectation of sort of instant gratification. But in banking, as consumers, our relationship with our bank, nobody keeps a check register anymore. The expectation is that if your card works or the Zelle transaction works or whatever, however you transact, that must mean I have money. And so we now have to rebuild, sort of course correct, and create a system that sort of makes that happen. The intention is not to drive, overdrafts and to create problems for customers. That's not a good experience. We need a better payment system. And so, a lot of the conversation that goes on today in terms of doing things faster is about sort of credit push, rather than having debits hit your account, because it provides more control. But the expectation is that if I can do it, if my tender type allows me to do it, then it's okay. No different than if I used to have cash in my pocket and I pulled it out. That cash was always good. I think we have to be thinking about how to make these better and to satisfy those needs. And in that instant gratification world, what starts in the consumer space often ends up in the commercial space. Sometimes we think we don't need it, but it gets there eventually. And so I think we have to be thinking about how we use these changing capabilities or these converging capabilities to create a better environment. We haven't talked, in fact, it's sort of odd, this whole conference, I haven't talked to anybody about blockchain. But that's another thing that's out there that's emerging. That's sort of newer. It's not tried at scale yet, but people are finally beginning to see sort of how they can use that in order to facilitate trade and transactions. And they may be financial transactions, or they may not. They may be some non-financial transaction. All of this is going to come together. The use of APIs, richer data formats, hopefully an improved and better national settlement system with the Federal Reserve. There's a request out for commentary based upon the Fed's interest in sort of improving that. I know that I'll create a lot of enemies when I say this, particularly with my friends in the banking community, but why do we transact from a bank-to-bank perspective Monday through Friday? What happened to Saturday and Sunday? And, there's a risk that's created by that because transaction volumes build up over the course of a weekend because we all still go to the store or we go online and we purchase or we do whatever. And so we build up all of these settlement needs that don't get taken care of until Monday. And so someday, whether I see it or not, I just believe there's no other way than to get to sort of round-the-clock settlement. And, does that mean that banks are open all the time? Sure. Digitally, they'll be open all the time. And what that means from a physical presence, and who knows? But these are all better transactions because they can reduce risk. They can make for less concern, less friction in the transaction. And we need to be focused on better payments and working together to create that, using tools that have been around, as well as including new things that come down the pike.
I think you're exactly right about banks being open digitally all the time, and that changed. I mean, the reason that they were opened and closed was there was a whole settlement process, a reconciliation, and a close of day. Just like we closed our books at the end of the month, and it took 15 days, and they've suppressed that. But when banks are trading, you're looking at instantaneous, on-time, real-time reconciliation with the partners because the exposures are too big. That same type of technology only made sense for massive transactions because it was so expensive. That continues to come down. The technology continues to change. So I think you're right. If you're in the payment space, I think it's an exciting time. But I did want to follow up on at least one topic. So you talked about APIs and richer formats. Richer formats in particular, I think, matter more to the corporate user than to the consumer. Somebody may not be involved in payments. Maybe they're a treasurer who came out of a different area, or someone's new to treasury. What do you mean by richer payments, and why does that matter?
Yeah. So, in the commercial world, so the contrast is, as consumers, when somebody puts money in our account, we can spend it. It's fully reconciled at that moment in time from a usage perspective. In the commercial space, it doesn't work that way. Incoming funds, you have to understand the source. You have to understand what it's intended for. And until you can do that, it's just idle. It's not really of great value to the company. And the greatest challenge that any treasury organization has is to turn those receivables into actual working capital. And what's required there is data. It's information. Who is this transaction coming from? Have they taken discounts? Does it satisfy certain invoices? What's going on with that? And, when you used to send a check and in the memo line you wrote, 15 or 20 characters, that was all the company had to try and figure out how that money applied. Today, you can send transaction data in these enriched data formats. You can have hundreds, thousands of characters worth of data that are very explicit about how these funds are intended to be used by the recipient. And with that information, you can really satisfy and create working capital, and you can not have exceptions. You can eliminate exceptions, and it allows for sort of frictionless payment activity, payments that really matter in the treasury environment that create real working capital.
That is a great explanation. And one thing I think is a challenge, sometimes banks will adopt here's a new modern format that can contain, it's XML. You can contain all these tags that carry that extra information that could be used. And they don't. They merely replicate what's gone on in the past. And that's completely missing the process. It's like now it doesn't matter how much data you send. It's almost free, whereas it used to be costly. And if all you send is this limited bit of information, you're not taking advantage of it. So, Rick, I wanted to shift into the service modeling. We talked about payments a lot. How will this convergence or confluence of technology and treasury changes impact the service models? You spoke a little bit about that, but I wanted to dive in a bit more.
So another place that we're spending time thinking, again, don't have the answers all yet, but just observing what's happening. And that is that there's a growing desire for self-service capabilities. And so that seems pretty obvious. And we talk about omni-channel, and you need to make sure that all of your servicing capabilities are connected and correlated so that you can work in one channel and then pick up where you left off in another, and so on and so forth. And that's all really important. But the thing that we've begun to observe is that while self-service is a desired capability, and we need to sort of build that out in a much more robust way as an industry, that there's also a point in time when someone who really desires self-service capabilities doesn't want them anymore. They haven't gotten the answer that they need. They haven't been able to sort of calculate the right question to ask, whatever the case may be, and then they're just frustrated. And so, as we think about it, we're trying to say, well, is there a way to predict 30 seconds before someone is going to run to the end of their rope on their self-servicing adventure? And then how do we insert ourselves in that? Possibly even now having a pretty good idea about what they were trying to do based upon all the work that they did, and give them the answer that they need so that they don't end up frustrated. And so will that take the form of chat or instant call or computer to human interaction? I think all of those are there, but clearly at the center of this is an awful lot of data science, where we'll be tracking, the provider will track what the customer is doing, let them go about it. But from a systemic perspective, just be monitoring that and drawing its own conclusions and saying, I think that they're going here, or now I refine and I think that they're going there. And actually this is the question that they want to ask, so that we can stay away and let the customer do what they want to do in a self-service environment. But just as we sense that they may have their search may have run its course, that we're there for them with the answer that they need so that they can quickly resolve it and move on. And we think that's sort of what service is going to look like in the future, as opposed to someone picking up the phone or staying online and keeping at it until they get the answer. So
punching through the call tree options until they're like, okay, this is 65 options.
Yeah. Well, I think the other thing about it is that this is that this sort of line of thought is really customer focused. It's trying to get to where the customer is and in their experience. And like, as somebody of my age, I might say, I don't understand why you do all that self-service. Just pick up the phone and call and somebody will give you an answer. But life doesn't work that way today. And I recognize that that's really very antiquated thinking. If you focus on the customer, you also know that no matter how much self-service they want to do, people have a tolerance for it. And then you have to build in order to support their need. And so that's very customer focused as opposed to technology focused or provider focused.
Yeah, and it's provider focused. Someone could say we want to put this self-service so that it reduces our costs. But if you're looking at how can I help the service our clients most effectively, it's self-service, getting to the end point as efficiently as possible. That's a complete win-win versus the other option. Let me just ask you this question. Let me see how I can form it. The banks need to be more strategic and more focused, and so do corporate practitioners. And there's a challenge there in terms of there's a lot of work to do, and there's a lot of thinking about the convergence of the different technologies that are happening, both from your side as you look down the road through the windshield to see what's happening, to see how you respond and help your customers, and as a corporate treasurer, for example, is doing these things. What is your advice for bankers and for corporate treasurers?
Yeah. So it's a great question. And the answer is really very simple in one respect, but really hard to execute. Everybody, like if you're a provider, you probably have fewer resources to get done more work than you did in the past. If you're in treasury, whether you're the CFO or the treasurer, or even just working in the payables or receivables environment or whatever, there is more work for you to do than there's ever been. And there's an expectation in the corporate treasury that there's a far more strategic view of what's going on. I mean, that's been happening for a long time, and it doesn't really show signs of abating. And so there's just so much to get done that it's hard to take time out to focus on something that isn't going to satisfy today's requirement. But we all have to do it. You have to find a way to break out some time. And whether you do that in a half an hour a day or a couple of half hours in a week, or you just say once a month or once every 2 months, I'm going to take a day or a day and a half and I'm going to gather some people together and we're going to talk on a topic, not with the objective to answer a specific question, but to get people to think differently. Invite providers in, whether it's a banker or it's your payroll company or whatever it is, but invite people in and talk to them about what is your business going to look like in 5 years or 10 years. And I would also say that if they can't engage with you in that conversation, you should consider that as an important trait of that relationship. People need to be able to think about the future. I am absolutely convinced that there is going to be very significant change in the corporate treasury environment over the course of the next few years. And I can't define a few. It could be as fast as 3 or 4, and it might be, a decade or more. But I think there's going to be very significant change that occurs. The elements are right. People that don't spend time thinking about what can be in the future are going to be left behind, or they're going to be told what to do, and they're not going to have a lot of control, and they're always going to feel sort of pressured because they realize that they're behind. All it takes is to set some time aside. I look in the past 10 or 15 years, and the importance of just learning overall has really grown. I mean, when you look around at corporate America, whether it's in treasury or anywhere else or financial institutions, the concept of sort of defining mentor and mentee relationships and actually learning from others, the fact that we're participating in this podcast and someone will take the time to listen to it, like that wasn't something that happened, 10 or 15 years ago. Everybody was wrapped up in their day. Well, how did they find time to listen to this podcast? They did. They didn't probably give up anything else, but they figured out how to make it work. And I think you have to look at sort of this, how do I future-proof my business? Well, it's by spending time thinking about the future. And you have to find a forum, get some people together, whether it's internal or external, and spend some time just saying what could be, how could a faster or real-time payment change what we do? How could paying employees every day change what we do? How could paying vendors on a real-time basis change what we do? I think just to have those conversations, it can be frightening, but if you do it in an exploratory sort of way, it could also be a lot of fun.
Yeah, payments can be dead. So how do you challenge customers that maybe they're getting wrapped up in the day-to-day, the week-to-week, because there is a tremendous amount of that. And some of these changes take a while. So if you delay a week, there's usually not a problem. But if you don't think about these things at least quarterly and figure out what the impact is, then you can fall behind. That can imperil your business or be a negative for your organization. Yeah,
and so I think for us, and I can just speak for TD and for our teams, I think it's one of our highest responsibilities is to challenge the customer, not in a negative sort of way, but to get them to think about the future. If what we do is we take orders and implement products, we can do that all day long, but that's really not where value is created. And so it's important for us, first, to not think that we have all the answers, but to think that we're certainly capable of participating in a questioning session. And then to encourage our customers to spend some time doing that. And even if that means that, they let us set something up. But again, it's not just about sort of conversing with your bank. It's about a lot of other folks. Sometimes it's internal, sometimes it's with vendors, et cetera. So I think our challenge and what we can do is to talk to the customers and to say, look, we think it's important. Let's spend a half an hour while we're here talking about what do you know about the whole faster payments environment? Or did you hear that Uber Technologies was the winner of the Pinnacle Award and they're paying employees up to 5 times a day? And what would that do for your business? And to just have some conversations about that, not expecting that we have the answers, but that we're educated and we're interested in participating in the conversation.
Excellent. Thank you, Rick.
Greg, thanks very much. It's been a pleasure.
You've reached the end of another episode of the Treasury Update podcast. Be sure to follow Strategic Treasurer on LinkedIn. Just search for Strategic Treasurer. This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.